Hello and welcome to Commodity Champions, where it has been quite a buzzing week, starting right with the crude oil prices, where we have seen prices actually gyrate many historical moves in the last 3 months. And after making a one-day single maximum gain in crude prices, we have seen some follow-through buying coming in for the crude oil prices. Well, the next week is going to be quite important because it's on Monday, the April 6th, that the OPEC has called for an extraordinary meeting, an emergency meeting rather, and this will have the OPEC members. It also has an invite to the US, Mexico, Canada, Russia, and other G20 countries as well. So in that sense, and expectation that there would be a coordinated effect or an action that all of these countries will take to ensure that there is no surplus or continued surplus in the crude markets is what really seems to have supported the crude prices right now. We also did see the markets oversold, so there is some buying that we've seen in crude prices because of that as well. Both Brent and NYMEX fell nearly 50% for the month of March, but we have seen some buying from those kind of levels. From the worst quarter ever, this quarter has started on a positive note. April clearly seeing nearly 25 to 30% gains as of now in this week itself for the crude oil prices. We are now joined by David Lennox, analyst at Fat Profits, and Peter McGuire, CEO of XM Australia. Thank you for joining us, gentlemen. Peter, starting with you first, and what do you make of the statements coming in from US first and now from Saudi Arabia, and that clearly has, brought the spark back yet again in case of crude prices?
Well, I think, Manisha, a couple of things. First off, there's no doubt that President Trump is frantically lobbying, the big numbers in the sense of the Saudis, and certainly to try and get traction across the OPEC plus and into Russia. Now, we've seen that dramatic move to the upside that we've experienced over the last 24 hours, which was just extraordinary. And we've seen momentum build on that. I thought there may have been a little bit of a correction, but US dollars edged higher through that 100-point, and so that's the US dollar index, and so has crude. So there seems to be a concerted push to let's see what happens Monday with that virtual meeting, and you might see a significant cut greater than 10 million barrels.
When you look back and you look at the numbers, this first quarter of 2020 has seen the demand go down by 1/3. That is 30 million barrels shaved off. And this is exactly the kind of production we see from US, Saudi Arabia and Russia put together. So what kind of output cuts are we looking at that would actually support prices?
It's hard to put a number to it, but, you've got to be at least 15 million, I'd say, maybe even more. It's hard to even quantify. You've got the likes at OPEC. They're only at about a 33 million barrel per day output, so might be a little bit more. But it's just this huge situation that it's hard to quantify, and I think that's where Monday it's fairly. It's hard for any analyst to really confirm a number at the moment. So I feel as though that it's going to be significant. There's no doubting that, and time will tell over the next matter of days.
Even with OPEC and allies, when I say that, it's basically Russia. And within this much also, we've seen so much of back and forth happen. So when we are looking at a coordinated, cut in the output, where we are looking to include countries like US and Canada and other G20 countries, because Saudi Arabia pretty much has said that without these countries joining in, there would be no output cut. So are we headed towards more difficult conversations, negotiations?
I would think so, and that's no doubt that President Trump has been on the front foot with MBS. So there's no, I think, ambiguity. They realise as far as the demand destruction picture, we're conscious as far as what the world's going into as far as shutdowns and lockdowns over the coming months, certainly over the Northern Hemisphere summer. So that's going to be just dramatic. And it's, people are saying it, as you mentioned, 35 million barrels a day as far as cut production or lost production that we're going to see from a demand side. Then how do we roll forward? What number do we need? And there's no doubt that Trump and MBS are going to rally. And if they don't get the numbers, I think it'll be a race to the bottom as far as price, and you could see it hemorrhage from here.
So, Peter, what is your best sense scenario on what are we expecting on Monday? Because even as the first conversation begins on Monday, it is going to be perhaps some time before we have the timeline, the quantity of output cut and the distribution on how much, who cuts, etc. What kind of a negotiation timeline to begin with are we looking at?
I think it'd be very hard for Russia to come to the party on Monday and say, yes, here's our number, and we're going to say that's our contribution, because I feel as though that it's OPEC Plus is a fractured unit in a lot of ways. If you look at that from a historical side, I think it's going to be a damn hard decision-making process to try and get all parties to equally participate. And that's where it needs to be a lot of strong rallying from MBS and, of course, from Donald Trump to try and get a concerted effort. So I don't think it's going to be an easy task at all. And if he can do that, Trump, then he's a better negotiator than possibly what anyone thinks.
Well, yes, as you said, if anybody can do that, it perhaps has to be the U.S. president. So, it has been volatile. I mean, as I said in my opening comments, it has been historical when it comes to crude prices, as we've seen in last 3 months. What is your price range that you're working with now?
I wouldn't be surprised for WTI. If you don't strike a deal, I think it's still got a $16 handle on it as far as to the downside. If there is no deal struck, then I think it's going to hemorrhage from here. Does it go lower from that? It's unknown. As far as an upside, I know this is wild, but you may get a few dollars up from here. The 26s, 27s, possibly 28, but I can't see it going dramatically further from that. But I feel one thing is for sure: volatility and the whipsawing of the market is going to remain. That's not going away, and that's going to be across equity markets, all commodities, of course, the bond market and currency. So I think that the volatility is here to stay, and those big wild gyration swings are just going to be what's going on for the market over the coming months.
David Lennox, analyst at Fat Profits as well, now joins us. David, what is your sense? What do you read into the U.S. president's statement and the Saudi Arabia calling for an emergency meeting on Monday now? And what is your sense on, are we actually looking at an actual output cut? And if that is yes, then, what is your sense on the timeline, the quantity, the distribution, etc.?
Well, certainly if you see what's happening now, I think we are now somewhere near the bottom for the oil price. Primarily that is because we are now starting to see some action from the various members of OPEC as they start to deal with the significant fall that we've seen in the oil price.
Yes, there is a lot of volatility. The prices have been oversold onto the lower side, and what the markets or these oil producers are talking about can have a big implication onto the prices. But David, these are extraordinary times. As Peter was also saying, the prices are still vulnerable to the lower side, and volatility perhaps could be on the higher side. What is your sense on the price moves?
Look, certainly at this stage, we think there's a greater possibility for the price to move higher. We've already seen when we just had President Trump come out and make an announcement that he thought an agreement between the Saudis and the Russians was close at hand. And we saw the significant impact that did on the oil price to the upside. That does show to us that there is more potential for the price from here to rise than there is for it to possibly fall. We think the bad news is all built in. At these sorts of levels, certainly many of the OPEC countries just can't afford to have that oil price go any lower for any significant length of time. It's just going to make their revenues bleed, and that's certainly going to, we think, cause unrest inside their countries. And that's something 99% of those leaders just don't want to see.
So, David, what is your price range then? Because in the first quarter of 2020, we've seen prices as high in 60s and 70s and then lower 20s as well. What is this new quarter looking to you like?
Look, certainly at this stage, we're saying we're at the bottom. When it comes to the upside, we are going to have to see just what does come of the rhetoric that we are hearing. If there is an emergency meeting that is called, and if OPEC do take some action to cut the oil production as we see it at the moment, then that's going to see the oil price rattle well beyond the, we think, $30 to $35 mark. So, yes, there's one thing you can be assured of in this market, that there is going to be volatility, but we hope that there is some sensibility inside OPEC and that volatility is to the upside. We'd be calling $30 to $40 if we see let's say, a cut in production. And if there isn't any cut, we do think that we perhaps will see just sub $20, but not for any length of time. As I've said, the OPEC countries just can't afford for the oil price to be anywhere near where it is at the moment.
David, this is, of course, the supply side that we are talking about. We haven't even spoken about the demand side yet, and that actually has taken a hit. I mean, as you guys were talking about on how most of the countries are under a lockdown, transportation, aviation, gas demand, businesses are shut as of now. When do you see demand recovery come in? And for a broader 2020, David, what is your sense on what kind of a demand are we looking at?
Look, certainly we can't see demand recovering really quickly, primarily because you've got the US, which is now deep in pandemic territory. And of course, they're one of the biggest consumers of petroleum product. So if the US does close down, and it certainly looks as though that country is progressing very rapidly towards shutdowns, that's going to mean that there is going to be significant flow back of production that would have gone into meeting that US demand. At this point in time, we said we'd lose probably something like 100 million barrels over the course of the length of the pandemic. That will only get worse as we see it extend further into 2020. So we're definitely going to have to see those OPEC oil cuts coming through, and very shortly, or the oil price, yes, could fall below $20 for a more considerable length of time. And again, that's going to cause unrest inside many OPEC countries.
Peter, this question is to you. And as we look at the slowdowns and concerns of recession in various economies, another thing that is bothering this sector also is the investment or the capex part of that. What is your sense with the kind of supplies there are and the way the prices have almost collapsed? Do you think investment going forward also would be a concern?
Well, I think it's got to be, Manisha. There's no doubting it. I mean, if you're looking at the capex spend, you would want to see some upside as far as if we're in at $70 or $80 or $100 barrels of crude, then there's certainly a reason to look at big capex spend and from the demand picture growing, more consumption across Asia, India, and Africa, and so on. But at the present, you would have to say that the major markets in the world are hemorrhaging. And there are that many black swans out there in the sense what's happened with equity markets, currency markets, commodity markets over the last month. We feel as though that there's, the uncertainty is going to really impact all of these producers, all of these consumers. And there's no sense in our timeline from an Australian perspective as far as when these lockdowns are going to be relieved. So, we've got government officials saying, it could be a 3 or 6 month or even, longer. Is this going to be the normal course of event across Asia? So if it is, 2020 is going to be a harrowing year from every component of it, as far as capex.
Oh, well, yes, 2020 hasn't begun on a good note. The first quarter has given out a lot of pain for various sectors. But for the crude prices, as both of our experts say, that if there is an output cut and a recovery by the second half of this year, we will see crude prices come back. Otherwise, it is back to lower 20s or even sub 20 for a short time. That is not ruled out. Peter, David, thank you so much for joining us. And thank you for that very enriching conversation on the crude prices. But with that, it's time for a quick break. On the other side, we will be joined by 2 more guests. Stay tuned.